Hello, and welcome back to the channel. I'm Algabot, and today we're exploring an expert advisor for MetaTrader 5 called Volatility Quality Trend Shift. In the next few minutes, you'll learn how this strategy reads the market using a price-only indicator known as the Volatility Quality Index, how it decides when to enter and exit trades, and how it manages risk on every position. It's a trend-following approach that focuses on the quality and cleanliness of price moves rather than just their raw direction. Everything here is for educational purposes only. Let's dive in and see how it works. So what exactly does Volatility Quality Trend Shift do? At its heart, this is a trend-following expert advisor that trades a single symbol on a single time frame. It's designed with liquid markets in mind, such as a major foreign exchange pair, a metal, or an index, on time frames ranging from 15 minutes up to 4 hours. The engine behind it is a price-only indicator called the Volatility Quality Index, or VQI for short. Unlike many tools, it uses no volume data at all. Instead, it scores every completed candle on two things: how clean the move was and how large the move was. Let me unpack that. For each bar, the strategy measures where the candle closed within its own range and how far price traveled compared to the bar's true range. A big, one-directional candle that closes near its extreme earns a high-quality score. A wide, indecisive candle with a small body sitting inside a huge range earns almost nothing. The VQI line then adds up these quality scores, weighted by the size of each move. Big, clean candles push the line strongly, while noisy, choppy bars barely move it at all. This design is what makes the approach robust to spikes and chop. The VQI only climbs while genuinely high-quality directional flow is present. Because of that, it aims to keep drawdown tighter than a simple direction counter would. Who is this style suited to? It's aimed at traders who prefer a systematic, rules-based method and who are curious about volatility quality concepts rather than raw momentum alone. It's a continuation strategy that tries to join an existing trend on a clean pullback and resumption. As always, remember that trading carries real risk, losses do happen, and nothing here is a recommendation or financial advice. Now let's walk through the exact rules, step by step. The strategy maintains 3 moving pieces, all calculated from closed bars only, so nothing repaints. First, the VQI line itself, the cumulative quality accumulator. Second, an exponential moving average of that VQI line, which acts as a signal line. And third, a baseline exponential moving average of the closing price, with a default period of 50, which serves as the prevailing trend filter. The core signal is a crossover between the VQI line and its own signal line. For a long setup, 3 conditions must all line up. The VQI must cross above its signal line, showing that clean upward flow is reaccelerating. Price must be trading above the baseline moving average, confirming we're on the bullish side of the prevailing trend. And the average bar quality over the last few closed bars, 3 by default, must be at or above the quality threshold, which defaults to 0.15. That last check makes sure the cross is backed by genuinely clean bullish candles and not a random fluke. For a short setup, everything mirrors. The VQI crosses below its signal line. Price sits below the baseline moving average, and the recent average quality is at or below the negative threshold. Because the VQI naturally dips below its signal during a corrective pullback and recrosses on resumption, the entry tends to time clean dip buys and clean rip sells within a trend, rather than chasing a move that's already extended. Now for exits and risk, which are engineered to keep drawdown contained. The protective stop is placed a multiple of the average true range beyond entry, 2 times ATR by default. The take profit target sits at a reward to risk multiple of that stop distance, also 2 by default. Once price runs one stop distance in your favor, the stop is pulled to break even, so many trades can then only scratch rather than lose. After that, the stop trails by a further multiple of ATR to lock an open profit. And finally, if the VQI makes an opposite cross against your position, the trade is closed early, before the hard stop is ever reached. Let's look at the actual MetaQuotes language code that runs inside MetaTrader 5. At the top, we have the input parameters. SignalPeriod, defaulting to 9, sets the exponential moving average period for the VQI signal line. BaselinePeriod, defaulting to 50, is the trend filter moving average. Confirm bars and QualityThreshold, 3 and 0.15 control the recent quality confirmation. Then ATR period, ATR stop multiple, and reward risk size the stop and target, while break-even R and trail R multiple govern the break-even lock and the trailing stop. Max spread points, lots, and magic round out the settings. Now to the long block. You can see the condition reads, if cross up and the close is greater than the baseline, and the average quality is at or above the quality threshold. When all three are true, the code reads the ask price as the entry, sets the stop loss one stop distance below entry, and sets the take profit at the stop distance multiplied by the reward to risk factor above entry. It then calls trade.buy with the lot size, stop, and target. The short block is the mirror image. If cross down, and the close is below the baseline, and the average quality is at or below the negative threshold, the code reads the bid price as entry, places the stop one stop distance above entry, and the take profit the reward to risk distance below. It then calls trade.sell with the same risk structure. Notice that both sides use the exact same volatility scaled stop and reward to risk logic, just flipped in direction. This is educational only, so let's see it on a chart. Let's bring it all together on this illustrative chart. Across the top, you can see the price candles with the baseline moving average drawn as a line beneath them. In the lower panel, the gold line is the Volatility Quality Index, and the blue line is its signal, the exponential moving average of that VQI. Watch how the two lines interact, because their crossings are the heart of every decision. We begin on the left with a series of rising candles. Price is pushing higher with clean, decisive bodies, and you can see the VQI in the lower panel climbing steadily above its signal line. This tells us high-quality upward flow is present, and importantly, price is holding above the baseline moving average, so the prevailing trend is up. Then we hit a pause. A couple of candles stall and pull back, printing smaller bodies and a dip lower. Notice what the VQI does here. It rolls over and eases down toward its signal line, even slipping below it during the pullback. This is exactly the corrective phase the strategy waits for. It does not chase the earlier move. It waits for the pullback to exhaust. Now comes the resumption. A clean, full-bodied up candle forms, closing strongly, and the VQI turns back up and crosses above its signal line. At this candle, all three conditions align. The VQI crosses above signal, price is above the baseline, and the average quality of the last three bars is above the threshold of 0.15. That's where you see the buy entry marker appear. The strategy has joined the uptrend on a clean dip and resumption. From there, price runs. The next candles push higher with strong closes, and the VQI keeps climbing well above its signal. Price advances toward the take profit target, which sits at twice the stop distance, that 2-to-1 reward to risk we discussed. When price reaches the take profit marker, the long trade is closed for a gain in this illustration. Along the way, remember, once price had run one stop distance in favor, the stop would have been lifted to break even, removing the original downside risk from the trade. Now watch the character of the market change. Near the highs, a candle prints a long upper wick and closes weak, a sign that clean upward flow is fading. Price then rolls over and drops back below the baseline moving average. In the lower panel, the VQI turns down and crosses below its signal line. The short setup now mirrors the long. A clean, full-bodied down candle forms, closing near its low. At this candle, the three short conditions align. The VQI crosses below its signal. Price is trading below the baseline, and the average recent quality is at or below the negative threshold, meaning the last few candles were genuinely clean bearish bars. That's where the sell entry marker appears. Price then works lower, candle by candle, with firm bearish closes, and the VQI continues to fall away from its signal, confirming the downward quality flow. Price travels down toward the short take profit target, again set at twice the stop distance below entry. When price reaches that take profit marker, the short trade is closed in this example. And just as before, the break-even lock and the ATR trail would have been working to protect and tighten the position as it moved in favor. So in one clean sequence, you've seen both halves of the strategy: a long entry on an upward quality flow cross above the baseline, and a short entry on a downward quality flow cross below it, each followed by a volatility scaled target. Notice how the VQI's dip and recross behavior times entries on resumption rather than at the extremes, and how the baseline filter keeps every trade aligned with the larger trend. And that brings us to the end of our look at the Volatility Quality Trend Shift Expert Advisor. Today we covered the Volatility Quality Index and how it scores each candle for cleanliness and size, the crossover signal against its own moving average, the baseline trend filter and the recent quality confirmation, and the volatility-based stop, target, break-even, and trailing logic that manage each trade. Remember, everything in this video is educational content only. It is not financial advice, not a recommendation, and not a solicitation to trade. Markets carry real risk, and losses are a normal part of trading. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with any strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.